we are still sticking on the topic of Forex, more specifically the players in the Forex market. So if you want to find out who the participants are, what they look like, what their natures are like, then watch this video in its entirety. So let's get into it. Until about the late 1990s, only about the big guys were able to participate in the Forex market, and this was mainly due to the fact that you needed a sum somewhere between 10 and 50 million to get started. Forex was originally intended to be used by large banks and large institutions and not the so-called little guys. And online Forex brokers are able to offer accounts to so-called retail traders or just your average day traders like us. The first player that I'm going to speak about is the super banks. Since the Forex market is decentralized, it's the largest banks in the world that determine the exchange rates. Based on the supply and demand of the currencies, generally they're the ones that determine the bid-ask spread. These banks, which are known as the interbank market, collectively do a lot of day-to-day transactions for both their customers and themselves. And some super banks include Citi, JP Morgan, and Barclays. You could essentially say that the interbank market is the Forex market. Next, we have large commercial companies. So companies take part in the foreign exchange market just solely due to the fact of doing business. Let's take, for example, Apple, the company that we all know and love. So let's say Apple wants to buy some components for a product in Japan. They obviously need to convert the United States dollar or USD for that Japanese yen, and this is essentially them participating in the Forex market. Since the volume of these large commercial companies is usually less than the interbank market, and because of this, they're usually dealing with commercial banks in order to process their transactions. Mergers and acquisitions between large companies are also another reason for that create large fluctuations in the exchange rate. And next we have governments and central banks. So governments and central banks like the Bank of England or the Federal Reserve are also major players in the Forex market. Just like companies, governments also participate in the Forex market for their operations. So things like international trade and also funding holding their foreign currency reserves. And central banks affect the Forex market by adjusting interest rates and controlling inflation. By doing this, they can control the valuation of a currency. There are also instances where central banks intervene in the Forex market when they want to realign exchange rates either directly or verbally. There are certain situations in which if the central bank thinks the price of their currency is too high or low, then they'll enter the Forex market directly and buy or sell so that they can offset that price. And then we have the speculators. This is the people who are in it to win it, baby. And this is probably the most prominent mantra of speculators. These speculators comprise close to 90% of trading volume in the Forex market, and they come in all shapes and sizes. And with that is it. Forex market players, baby. Let me know what you think about the market players. And yeah, if you got any value, as always, that like button. So yeah, until next time.